The U.S. economy and financial markets continue to perform well as we come to the end of October. Economic growth looks to be about 2% year to date, slightly less than what we had last year, and inflation is going to be in the range of 3+%, slightly higher than was the original estimate. Labor markets are a little bit soft as they adjust to a tighter border and deportations. Tariffs also have had an impact in some businesses where labor growth had been expected. But all in all, it looks to be a good economy. And that, of course, gets reflected in financial markets, which are driven by consumer spending, businesses investing, and normalization of trade relations, which have been in transition for about the last 6 months. So when we look at what's driving the stock market, because we get asked regularly, are stocks overpriced? Is it unsustainable? What can we expect in the future? The truth is that corporate earnings continue to grow, as do earnings per share, and the outlook for the next 12 months in earnings growth. That just supports growing stock prices. And so far this year, most of the growth in stock prices has been fully supported by an increase in earnings. That's good news. That's being driven as well by continuing investment and adoption in generative artificial intelligence. The concerning side of that is it has become a principal driver, not only in high tech, information technology, communication services, and consumer discretionary spending, but spreading out into other industries as well. It's good that there's a dispersion of earnings growth into the other parts of the business community and stock markets, but it continues to put a heavy weight on the growth in AI investment and adoption, which makes it a little bit vulnerable. Now, when we look at the importance of AI, not only to the U.S. economy, to businesses, to tighter labor markets, but also to national security, the U.S. government has a direct interest in continuing to foster that. We also get asked as to whether the U.S. government involvement more directly in business is a good thing for the economy long term. Long term, it's probably not. Planned economies don't work very well, and government putting its thumb on the scale usually is not helpful. It's often untimely. But so far in such a critical technology where there are so many players involved, it doesn't seem to be moving things one way or another, but continues to encourage private investment and use. Trade tensions flared again recently, particularly over China's increased restriction on the availability of rare earth minerals and the U.S. response by threatening to raise tariffs. At the end of this month, President Trump and Chinese President Xi will meet in South Korea for the Asia Pacific Economic Cooperation Forum to try to get this worked out. The outlook for that seems to be positive as each country is benefited by getting this resolved. As to consumer spending and businesses investing, even though we don't have government data with the government shutdown, we do have high-frequency data from other sources that show consumers continue to spend and businesses continue to invest in ways that certainly are a little bit beyond expectation, just given some of the uncertainties that we're facing. The S&P 500 is up 14.5% this year, net after a correction of almost 19% in February, March, and early April. The All-Country World Index has outperformed, with international stocks doing better than U.S. stocks as a result of the dollar being down about 10%. Gold has been a great performer this year. Gold prices were up about 62% before a correction earlier this week. but the outlook for gold continues to be positive as foreign governments and central banks continue to diversify their reserve assets to include non-dollar assets as well. Um, Overall, we remain positive about the outlook for the remainder of this year and next, understanding that we certainly are overdue for another pullback, so we shouldn't be surprised if we see something like that. But when it comes, and however it comes, it's very much expected to be short-term, with positive drivers for both the economy and investment markets for the rest of this year and next. If you have any questions, please let us know. Don't hesitate. We're always happy to respond and follow up. Thank you.